Hello, everybody. This is Toni Turner, and welcome to the market now as of Friday, September 29th at about 3:40 p.m. Eastern. Well, underlying U.S. inflation pressures moderated in August, with the annual rise in prices, excluding food and energy, falling below 4% for the first time in more than 2 years. And of course, that's welcome news for the Federal Reserve as it ponders monetary policy outlook. But the battle against inflation is far from being won, as the report from Commerce Department today showed overall prices remaining elevated. Boy, we know that if we go to the grocery store, partly because of higher gasoline prices. Still, slowing underlying inflation raised hopes that the U.S. Central Bank will not raise interest rates in November. We will take it. And now let's go on to 3 charts that could give us some insight into the week to come. First of all, as we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. Of course, this is the exchange-traded fund that closely follows our benchmark S&P 500. Now, today when I captured this chart, as you can see, it's way down here. It was trading at $427.18, or about $42.71 on the S&P 500 itself. We know that since the breakout in May back here, that the SPY has walked up the 20-day moving average. It started moving up the 20-day moving average in May, did it in June, then rose all the way up to the high on July 27, and rose to an intraday high that day of $459.44. So that's a good thing. That high has remained the high, not the all-time high now. The all-time high was at $479.98 in January of 2022. So now at this high right here, we're about 11% below that all-time high of, call it 480 in January 2022. So now we've got this, we'll call it near-term high at $459.44. And that high has remained the high ever since. So from that high, the SPY made that gap up, and that was a beautiful uptrend we had. It gapped up, fell down here below the 20-day moving average, the red line, below the 50-day moving average, the green line. And on August 18th, it gapped down to open at $433.37. And it tried to rally back in the next week. Couldn't do it, got hit on the head by the 50-day and 20-day moving average. Then did manage to rise on up here to $453.67 on September 1st, then back down to the 20-day, the 50-day, the 20-day, and then finally moved back up and rolled down to the September 27th low, which of course was this week, at $422.29. Now let's look back. Let's back up here and look at the big picture. Many years ago, one of my first trading instructors used to say, back up, and he'd make us get out of our seats and stand up and back away and look at the chart from 2 or 3 feet away. Back up and look at the big picture. So if we do, and I can't ignore this because a lot of the technical analysts out there would say to me, Toni, you can't ignore what's on this chart. If you do, you can see kind of a top reversal pattern known as, and it has double shoulders, top reversal pattern known as a head and shoulders. So sometimes they have 2 shoulders. This one has 2 on each side. So this is the left shoulders, the head, the top of the head, the right shoulders, and then it broke here. So we take a line here. We take the line for the neckline. This is the neckline. Interestingly enough, it comes right over in that gap right there. That's pretty interesting. So now, do you see 2 shoulders, a head, 2 shoulders? It is only a head and shoulders if price continues to make the right shoulder and then breaks below. what is the neckline. If it breaks below it, it's a head and shoulders. Now, head and shoulders can be continuation patterns. A lot of people don't know that. They think it's just top reversal pattern. But at any rate, it can be. It did break here. The neckline did form. So to measure to the top of the head up here, to get the possibility of where it could go, a lot of technical analysts like to figure out a measured move. So we measure from the top of the head down to the neckline. That is 27 points. Then you take and you subtract the 27 points from the neckline you see. And if you do that, and again, this is called a measured move, it does not mean that the SPY has to come down to 405. It doesn't mean that. It's just a technical process that a lot of people use to measure the possibilities. The measured move would take it down to 405. If I can draw a straight line that way, and if I draw one this way, as it turns out, that comes to right over in here. So it's a possibility. We've got a lot going on in this country right now, but it's not an absolute thing by any stretch. So let's look here. Nearby potential resistance here is at 435. That's the top of that gap. That's also price resistance from the August low here. So nearby resistance would be 435. And then, of course, we have the 20-day moving average coming in at almost 440, and the 50-day moving average coming in at 444 right now. So this could be potential resistance to the SPY when it starts back up. Right now, potential supports down here at the 200-day moving average at 418.93. We can call it 419 to make life a little easier. And we can also use this low of that day that we talked about just a minute ago. But right in here is potential support for the SPY should it start lower next week. We've got the government shutdown will be decided Saturday night at midnight this weekend. We've got the UAW strike going on and seemingly getting a little bigger. So we could see some more volatility in the coming week. Still in all, please remember, if we are patient, we will also see some great opportunities coming up because of the way the market's moved. Our next chart today is a daily chart of the Invesco QQQ, symbol QQQ. Of course, this is the exchange-traded fund that follows the Nasdaq 100, a very important index. It includes all of the big momentum stocks and tech stocks like Apple, Amazon, Nvidia, Tesla, that whole group. Now, when I captured this chart today, the QQQ was trading at $358.19. It's trading right now about 13% below the all-time high of the QQQ in November of 2021 at $408.71. But it's done real well this year. The Q since January moved in a really nice uptrend. So we truly can't complain about the uptrend we had all the way into this high in July at 388. We can't complain. And that high here remains the high at 388. So we're over here again at 358. We don't see a head and shoulders here. There is, you can certainly draw a head. Excuse me. You can certainly draw a trend line along here if you want to. Although I'd need to get this a little more exact. So we're going to say that there is support here at 350, 351. So far, it has not been broken. The Qs are definitely, they were in this uptrend for nearly the whole year. Again, as I said, up to that July high at 388. And it's been kind of in a rest stop ever since. Now, the Dow and the S&P 500 were up higher this morning. They gapped up because of the commerce report I told you about at the beginning of the session. Then they started down. The government, potential government shutdown is having quite a weight on the stock market right now. And of course, we have other things going on. So please do keep an eye, again, on the resistance points up here, the 20 and 50-day moving average in the coming week, and definitely keep an eye on the 350 level, 350, 351, very important support here because the Qs are trading below the 50-day and the 200-day moving average. So keep an eye on that 351, 350 level. Keep an eye on that and trade wisely. Okay, our final chart today. I am going to tell you I went through many ETFs. It was hard to find patterns out there, chart patterns on the ETFs that looked reasonably positive to me, and that always happens during times like this, so it's not a big, huge deal. But at any rate, I again, be careful next week. If you don't, there's certainly nothing that says you have to trade. Just be careful when you get in so that you're making money, not losing. We are going to look at this chart, the ETFMG Prime Cybersecurity ETF, symbol HACK. It has 50 holdings. Top holdings are Splunk, Akamai, CrowdStrike, Checkpoint, and VeriSign. Now, when I captured this chart today, the HACK, we'll call it the hack, was trading at $51.52, right under the 20-day moving average, but managing to sit atop the 50-day moving average, managing to do that. We can look left on the chart with me back here. After making a recent low in May 4th actually, at $43.33, the HACK, the hack, climbed up to a June high up here at $53.84. That was a pretty steep move. It was a really nice move. Then it fell back a little bit, as one can imagine. Then it moved up to the August 1st high right here at $52.85. Then it said, okay, I'm getting tired, then fell way back down here in August, gapped down on August 18th at $48.70, then climbed up here. This is an active dude. It climbed back, and it does, of course, have, it's definitely a tech ETF. Then it climbed back up to September highs up here at $53. Actually, the top here was $53.53. Then it went kind of sideways, but dribbling down, fell back down here to the September 26th low at $50.48. Right here is $50.48. Back down below, again, the 50-day and 20-day moving average. Now, again, don't feel as though you need to trade. Cash is a position too. However, if the market starts behaving itself next week, and in the coming week, if it becomes relatively positive, and if the HACK can stay above the 50-day moving average, and that's pushing it, because the 50-day moving average is coming in here at $51.46. I'll keep an eye on it. See if it can stay above that 50. If it moves down and then back up again, all right, I'm willing, but I want to buy it above the 50-day. That's the point. So if it can do that, I may add a small position to my trading portfolio. Now I'm going to cut it slack here a bit. My stop's going to be at $49.90, and that kind of lines up with this prior low back here. If and when the hack can move above this prior high up here, so I'm going to call it $54. If it can move over $54, I will add to my position, and of course by then my stop will be a trailing stop. So you may want to keep an eye on the hack in the coming week. Now, if you'd like to become a more successful trader, this is a great time to check out my online training programs. You can choose from 10 different programs, including our popular flagship product, 7 Steps to Successful Trading. If you'd like to learn how to swing trade, which is a great thing to know how to do kind of in markets like these, how to trade the trend to profits, that's one of my favorites. How to read charts is great for novices. 3 winning setups is really good for short-term trading. and bottom fish like a pro. Another, we're looking for bottoms here definitely, so this is very good to know how to do. Check out these timeless programs. They will show you how to elevate your trading skill set and how to increase your gains quickly and easily. Check out all of my online training products. There's more besides these. Just go to the link on this screen, or easier still, just click on the orange button below. So, hey, until next week, be careful out there. Keep green on your screen. I'm Toni Turner, and this is the Market Now.